All right, we are live on Facebook. Let me get started. Live on Instagram. We're live on our conference call for another episode of Tulsa-talks. Hey, King Josh, can you take this brand off, please? Only JMA brand water around here. Another episode of Tulsa-talk Thursdays, our live question and answer session, video stream, podcast, etc., where we galvanize the Tulsa Real Estate Fund community, TREF life, and where we just have an open and transparent dialogue about the accomplishments, the vision, the progress and processes, and all what's going on in the Tulsa Real Estate Fund, the world's first Black-owned real estate crowd fund, and a fund that is focused on social impact, being a funding source, a capital partner for the urban community owned by the people. And we have over 9,400 investment partners in our fund. And we have something really cool and special I want to lead with for our investment partners. So this is open to the public, right? Social media following, Facebook, Tulsa Real Estate Fund LLC, Instagram at Tulsa Real Estate Fund, our conference callers, everyone can be a part of this. But I have a private message that will be going out in email over the next 24 to 48 hours to only those who are my and our investment partners, speaking on behalf of our staff, our team, and our partners. So I have a private message for you guys. So for anyone that's actually an investment partner, we have your email addresses. Please, and the message is so important, I've already instructed my team that we're gonna send this message out about 2 or 3 times over the next week to ensure that you open it and you watch, you sit at home, please get your notepads out. And it's a very special message of transparency, of our vision, of our progress, some answers to some of your questions. I have a special message for our fund partners and participants that will go out to your email address, the email address in which you register for your investment account. Excuse my hoarseness today. I've been doing much talking, much conference calls, many videos, many promotional content for our upcoming corner class tour, which launches May 3rd at the Tulsa Real Estate Fund Legacy Center. So we'll be again launching our corner class tour, 10 cities. This will make a total of 60 cities over the last 4 years. 60 corner classes the last 4 years, and over 26 different cities where we're going to be teaching financial and wealth education on the street corners for free. And we're going to launch this corner class at our Legacy Center asset at 3015 R and Martin Street in East Point, Georgia, right here next to Atlanta and 5 minutes from Atlanta, Hartsfield-Jackson International Airport. So come one, come all. If you want a peek at the Legacy Center campus, it will not be an inside tour, but if you want to see the outside and the campus and be in the midst of this legendary corner class and this legendary asset, the Legacy Center, we encourage you all to come out and join us May 3rd from 6 to 8 p.m. here in East Point, Georgia, where we'll have the launch of the corner class at our Legacy Center. Yes, ma'am. Water? Oh, my thing? Gotcha. So, guys, you can call in and join our question and answer session. Our number's right here next to me for those who are watching on video. And you can, once you call in and press your pin, you can press *6 to get in the question queue to ask questions about the fund. We are in the process of submitting our annual qualification. And once that is done, we'll be opening our subscription again for investments. Right now, you can only get on the waiting list. You cannot invest with us currently with our 9,400 plus investment partners. But our fund, as a capital partner, is still deploying capital for opportunities. We are currently slated to close what we hope to be about 5 real estate transactions over about 10 assets over the next 2 to 3 weeks. Totally over, I want to say, about 35 units collectively, and millions of deals and opportunities that will be that are clear to close. Several of them, 4 I believe, are clear to close, and some soon to close Those assets will be revenue producing assets for our fund as capital partners. And so, King Gene, I meant to tell you that I stopped. I did want to teach something today. Actually, I can probably grab my board, excuse me. So guys, I want to show you something. Before we do our Q&A session, I want to show you guys who are here with us something. If you grab me a marker, I probably can set this up. We're going to move our Pan-African flag, right? We're going to move it right here next to Tulsa, and I'm just going to put up a quick little whiteboard chart, and want to give us a mini lesson on how our fund operates as a funding partner, a capital partner. I'm going to sit as I do this, Gene. And so, again, our company is what we call the rich uncle for the urban community, a funding source for the urban community, again, owned by the people. And so I'm going to write in green, money green, and I want to express and illustrate to you all who are watching part of our niche in real estate and part of our niche as a capital partner, right? And so for those who are a little more real estate savvy and those who have been a part of the Jay-Morrison Academy, you are familiar with terms of creative financing or financing in general, conventional, traditional financing, private equity and private financing and private funding, which include all types of funding such as gap funding, right? We have a gap in between your renovation and your development, or a gap in between your development and your deal. Construction funding or financing, mezzanine financing or funding, private equity partnerships, joint ventures, refinancing, and acquisition financing, development financing and funding, all these terms, right? So this is what we do. And so with that, we do that on a plethora and variety of assets, such as apartment buildings, student housing, single-family fix and flips, multifamily fix and flips, land and lots and subdivisions and developments, hotels, hospitals, mixed use, office buildings, all of that we fund, right? Those are all types of real estate assets. And we fund them in those many different ways. We fund acquisitions, we fund construction, we fund rehabilitation, we do gap funding, as I mentioned, we do mezz funding, we do land funding and financing. And so what we said is that it's not about our mantra, although we've said buy back the block, what it really is for us, is we fund the block. That's our, right? So for those who are looking to fund opportunities in urban communities or communities that are not urban, but are good real estate assets there. What we do as a capital partner is we look to be a responsible capital partner and responsible, of course, for me, fund manager, and create win-win scenarios for us and our sponsors. So I'm going to give you an example. So again, I mentioned we're looking to close out. Now that the due diligence process has come in, we're looking to close out some real estate acquisitions on some assets, right? Several assets over the next few weeks. And I explain those assets clearly in this video. I'm urging all of our partners to watch. That will be emailed to you in the next 24 to 48 hours. It's only for our investment partners. This is not for everybody. And when I envisioned this fund several years ago, literally 4 or 5 years ago, I thought of this concept. I always thought about it being fully transparent and letting our partners see what's going on the backside. And so I want you guys to, again, I'll encourage you all to watch this video. If you have invested with friends or family, nudge them and say, Jay got a special video coming to us, we gotta watch it. And so I want you all to watch this video coming out in the next 48 hours. But I wanna show you guys, even our general crowd, a little bit of our process and what we mean by being a funding source and the opportunity at hand. So once we close out, which is our projection and our hope, on our next round of capital deployment, in addition to the first 3 assets that we have deployed in our current legacy center asset that we're developing, there'll still be $1 million or so of capital that we're still going to be deploying into other assets. So we're still taking on capital partnerships, and funding opportunities. Understand? So here's what happens. I want to talk about a little bit of the process, and I want to talk about the unique opportunity for those who want to get funded. Here's what happens. Sponsors, right? So we call them sponsors, investors, developers. Also in the industry, they're called operators. These folks, these are people that are on the ground who, for our educational purposes, who have deals, who have real estate opportunities, who may have inherited properties or already own properties. They may be looking for some type of capital, right? Some type of capital or funding. Again, all those points we mentioned. They may want funding for the acquisition of a new asset. Right? They may want capital for the rehabilitation, the rehab of a current asset. They may want capital for new construction on land. They may want gap funding or financing on an asset they currently own or want to own, but funding to hold them over until they get new construction funding. So they may say, hey, Jay, can you fund this deal? I already have pre-approval from a construction lender, right? Who will then come in once I own this land and this asset. A construction lender will then come in and take you guys out and pay you off. That's called gap funding or financing, right? So they may want gap funding. They may want a mix of equity and financing and debt, and that's called mezzanine financing, right? So all these things, right? So sponsors and investors come to us with all these opportunities. And on my board in the office next door, there's about 24 deals that are currently either clear to close, in underwriting, being vetted, in application phase, in process phase, where we're talking back and forth daily. So what you guys don't see in between these Thursdays and in between IG videos and in between our newsletter that comes out weekly or bi-weekly, is you don't see all the conversations, all the due diligence that happens. I'm going to get to that in a second with these deals. So here we go. Sponsors have a capital funding need. They then submit that need through our deal application, right? The form on our website. So we have a deal submission. Excuse me, I'm like all off today. It's been a long day, trust me. Right? There's a deal submission, or what we call opportunity submission. Once this opportunity submission comes into our team, now, and mind you, if you want to submit an opportunity, you go to Tulsa, Tulsa, real-estate-fund.com. So you submit your opportunity, and now our underwriting team then gets this opportunity, and they do an initial, right, deal scrub, we call it. This is really an early evaluation on the deal to see if the initial terms of the deal make sense for the fund and see if the sponsor, investor, developer, operator, if they're really a serious candidate, right? Based on experience, based on the way they submitted the deal, based on the potential interest or joint venture opportunity they're offering, all that, right? Once this is either denied or approved. If it's on the borderline or looks good, this deal usually then goes to me for a next level of, right, pre-approval. So I'm giving you guys all what goes on in the behind the scenes, but also what it means to fund the block and what we do and what this organization is all about, this firm is all about. So this pre-approval process happens, and a pre-approval letter is then given to the sponsor, and the sponsor then pays an application and third-party underwriting fee in order to, if they accept our terms, if terms are accepted, we then go into the official underwriting phase. And in that underwriting phase, the sponsor, operator, developer is giving a needs list. These are the things that we need as an organization and firm in order to begin to fund or underwrite, but begin to inevitably fund your deal. So we have dozens of sponsors, typically about 3 to 5 opportunities or deals that come to our website every day. And every day we're scrubbing these opportunities for the best deals on behalf of our funded partners, because it's our job as a firm and my job as the founder, fund manager, CEO, and a key fiduciary to make sure that we are investing responsibly, not fast, not necessarily quickly, but prudently, responsibly, diligently. And so we go through this process of underwriting, not just underwriting the opportunity, but underwriting the sponsor and the opportunity. So it's a dual underwriting. We need to know more about the person we're getting involved with and know more about the opportunity we're potentially getting involved with. So underwriting begins, and underwriting is a series of, again, in this needs list, there's a series of due diligence items that we ask for, right? These items, again, go into, obviously, an appraisal. That appraisal could be the as-is value of the asset or property. It could be the ARV, or after repair value, or after construction value of the asset, or after development value of the potential opportunity. So we have sponsors that come in and say, hey, can you fund 3 acres of land for me to build a hotel? And now we're going to get an appraisal that says, how much is this hotel worth after this developer develops a hotel? And then we're going to make a decision based on that after construction value and development value, and based on the prospectus and performa of the sponsor, basically their financial projections, to see if this is something we want to get involved in. And then we make a determination at what extent do we get involved, what interest rate, what profit share, what points that do we charge, loan origination fees, balloon payments, prepayment penalties, exit fees, interest-only loan, 1-year term, 2-year term, 15-year term. All these determinations are made as these different opportunities come in from different sponsors. Everything from residential fix and flips to student housing to office buildings to hotels to new constructions, subdivisions, and all in between, right? So these are the multi things that come through our organization. So after due diligence is done, and assuming this deal is going the right way, at any time we can cancel this deal or deny this opportunity if it does not make sense for us and our crowd. So after due diligence is done and we have fulfilled our needs list, there then is a clear to close issued, which means this has passed the smell test and we are ready to actually go to a real estate closing, a transactional closing, and to facilitate and fund this capital partnership and opportunity. We go to the closing table, we've recorded all, we disclose it all on our 1U filing on the SEC website and on our website, and we tell you guys about it, etc. But all this has to happen. And the thing is, as a fund manager, I got to make sure that it happens, again, diligently, prudently, and responsibly. I just can't rush through it. And I got to make sure the returns make sense, etc., right? So this is a little snapshot at our process, and obviously what I teach my students, my coaching clients, and those who come under my tutelage and training at the Jay-Morrison Academy. But I live this in real life, not just here at the Tulsa Fund, but also in other private syndications and real estate developments, okay? So we go through this process of, again, underwriting, scrubbing, and vetting these deals and these opportunities. And there's a whole bunch of financial and other phases and actions that happen within this process. This is a quick snapshot. So now I want to talk about what it looks like for you as a potential capital partner with us, what it is special that we do, right? So this is a little bit what we do, but I want to talk about what is special that we do other than other hard money lenders, private equity lenders, or capital sources. And if we have a dry paper towel somewhere, that might help me. Oh, I might have to write people fund the block over again. Now, just again, I want to give us just some, thank you, King J, just some backdrop as to, what our job is and what it looks like and what it means to you. And we know that many of our investors have received their K-1 partnership tax filings or tax form, and this also is to illustrate to you in 2018 a level of diligence we've been doing for the deals that we are now closing in 2019, which will be revenue streams and profitable for our fund. And again, in the video I'm sending you all, just to our investment partners, I want you all to, again, to take your time. Don't just watch the first few minutes. I want you really to lock in. It's a personal message, very intimate, very genuine, very transparent, from me as the fund manager, your partner, to you on, I'm not even going to explain what it is. I want you to watch it. That's it. It's special. It's real. It's going to be sent only to our investment partners, and I want you guys to watch it. All right? It'll be coming out the next 24 to 48 hours, and I'm going to send it to you multiple times to make sure that you watch it. Right? It's that important for us because it is the nucleus. It is a glue piece for what we're doing. And I think it just rounds it all out. But back to We Fund the Block, right? So I'll write it again. We Fund the Block. That's what we're here to do. We're here to fund neighborhoods, blocks, developments, assets, opportunities. And so with the next opportunities that we'll be disclosing soon, God willing they close, they are clear to close. One thing special that we've done, and again, for those who are watching, you can call in, press *6 to ask questions in just a second. What we've done that's special is this. We've been able to fund, right? One person right now, but there will be hopefully 4 or 5 that we're going to be talking about over the next couple of weeks. What we've been able to find and do really special in this capital partnership space is we've been able to give sponsors the opportunity for 100% funding, right? So that means not just acquisition, but funding of acquisition, meaning the purchase, and the renovations or development cost, or rehab cost. So we've been able to come up with a formula model that can fund sponsors, many of which are in the urban community, many of which are in our opportunity zones, many of which are in blighted areas. Fund sponsors 100% funding of acquisition and rehab development cost. Also, we've been able to include and finance those sponsors' points, right? Or what's called origination fees. So for those who are in real estate and have done deals, you know, especially in the private sector of capital financing, that there are origination fees and points charged when you are getting private capital. So instead of sponsors have to come out of their pocket with those points, a point is equal to 1% of the loan amount. And so what we've been able to do is to fund or roll over or finance the points of these deals, which allow sponsors to be able to transact real estate with not just 100% of the funding and development, but 100% of the actual origination fees as well rolled over into the loan, right? So another good point. And so what we're doing is we're making a path of ease for responsible and experienced developers and sponsors to be able to do business with us and get the capital they deserve and need to execute. But it allows us as a fund to be able to get the opportunity to do business with those who we serve, but also be able to get modest, I guess I'm supposed to say per regulation, modest returns. In these cases, we are able to get different streams of revenue to increase those returns. So I'm going to explain that to 1 second, right? So we have 100% funding. We have 100% funding, including the financing of points. We've also been able to, is defer one F or two? I feel like it's one. Okay. We've also been able to defer, right, in many cases, 6 months to 12 months of interest-only payments. So what this means is that not only can a sponsor get 100% funding, roll their points into the transaction or the loan, we also will say, you know what? No mortgage payments due for the first 6 months to 12 months, depending on your deal. You have to pay it, but you'll pay it at the end of the transaction, as long as there is enough equity and the loan to value is conservative enough. So we're able to defer 6 months of payments. This allows the urban investor and developer to get into a transaction with little to no money out of his or her pocket and have a cushion to facilitate their development for the first 6 to 12 months and a capital partnership opportunity. And so for us being so flexible in our funding, we are able to still bring in income, right, from this interest. We're still making money off the interest, whether that be anywhere from 8 to 16% interest, but many times it's deferred, we're still able to make our points, whether it be 2 to 4 or more, but right now we're about 2 to 4 points on the deal, right? And we are still being able to make money on the entire loan amount of the acquisition and in development, again, through the interest on the deal and deploy our capital. So we're able to deploy more capital. We can deploy more, still get our points rolled into the actual loan, and defer the interest and still get the interest we need on the back end of the loan. And because we are being this flexible, most of, really all of the sponsors that we have agreed to these terms have also agreed to give, or I won't say give, but we have earned and partner in a percentage of either what we call the exit profits on the transactions, right? So we're not only receiving, deploying capital, getting points and interest, we are also getting exit, or balloon is called in the industry, fees on many of these transactions, in addition to our points, our interest, and our capital deployment, which means more revenue for the fund. But where I've already illustrated it's a win-win is that if you don't want to pay an exit fee or you want a better interest rate, then you need to put more money down on the deal. That's all. If you come to the table with 20% down, we can be more lenient on the rest of our transaction because we're taking less risk because you created more equity in the transaction. But if you want 100% funding, if you want your points rolled into your loan, if you want your interest potentially deferred so you have a cushion the first several months so you don't have to pay those carrying costs of a mortgage those first several months, then I think it's fair that you also allow us a little more profit and opportunity in the transaction to mitigate our risk or reward us for the risk that we're taking as a fund. This is what's special. This is what we've been working on. This is what we are executing in real life. And hopefully the next time you see me in front of one of these cameras, we'll be talking about the deals that actually closed, as there are 4 clear to close right now and 5 on the way. This is the opportunity and where we're going to make a special impact within the urban and minority and underserved and marginalized communities in which we serve, in which our mission is targeted towards. It's to be able to create creative funding and capital partnership opportunities that are a win-win for our fund and the risk that we take, for our investments, for our reputation, and for our investment of energy and resources, but also are a win-win for our operational partners, our capital partners, and our sponsors. And we will fund deals that are below, right, that are less than $50,000. And many of our Detroits, our Cincinnatis, our Alabamas of the world, it is hard to get a deal funded below $50,000. It's hard to find funding sources. Well, we will fund those opportunities as well because those are the communities in which we serve. And so we're hitting on all the points to meet a need, a gap that has been in the real estate market and real estate financing industry for decades. I know because I've been in this industry for decades. And so we've pulled our dollars together. We've created this fund, an economic vehicle to serve those exact people with a sophisticated, with an organized process, underwriting system, and fund guidelines and metrics and matrix that meet the needs of those urban investors and developers we say and we do serve. And so that's what's special about this opportunity. And this also is special because it creates more revenue streams for our fund than a traditional, right, financing opportunity. And I wanted to share it with you guys. I'm happy to do so. And so in a short 1-minute Instagram spiel, let me use a temporary wealth rag. I want to say this for a short 1-minute Instagram commercial, which King Gene will, I'm sure, mark on our video so we can cut this clip easily. Attention American real estate investors, developers, sponsors, and operators. The Tulsa Real Estate Fund is here to be a funding source for the urban community owned by the people. Our over 9,400 investment partners have millions of dollars of capital to invest in your real estate assets, acquisitions, and needs through gap funding and financing, mezzanine, construction, acquisition, rehab, and development needs. By offering you 100% funding on your deals, by offering you origination point fee rollover or roll in, by offering you deferred interest on your mortgage payments from 6 to 12 months, and by offering you joint venture and revenue share opportunities, including deals that are below $50,000. We will fund your opportunities if you are a qualified sponsor, operator, developer. Go to tulsa-real-estate-fund.com to submit your opportunity. Thank you. That was 1 minute. Cool. So now we're going to get into Q&A session and get up out of here. But I want to give you guys some perspective on the business and what we're doing. And I'm looking forward to continuing to execute and continuing to live out this dream and this vision of group economics. And it's not about us just pulling dollars together. It's not about buying back the block, but it's really about funding the block and funding developments and funding acquisitions and funding opportunities for those who have been marginalized, for those who have been opportunity-less, and for those who are talented, who are brilliant, who have opportunities right in their neighborhood, but just cannot get access to the capital. Well, you got to go through our website. You got to qualify, right? It's not going to be no fees out of pocket. You got to pay for an appraisal. You got to pay for an inspection. You got to invest into the opportunity, but we surely are going to make it not just as easy for you as possible. We are going to be as flexible as we can within responsible parameters and guidelines to make sure we protect our fund first and foremost, but then offer great opportunities for you as a sponsor as well. All right, and so with that, I will take Q&A on our call list. I'm sure Queen Tam's moderating. You, Queen Jazz. Queen Jazz is moderating tonight. *6 to get in our question queue. We'll take a few calls and we'll get out of here.
No one's in the queue, but Dev Pollard on Facebook asked, what business financial info do I need to submit for an opportunity to be considered?
All right, so someone asked on our Facebook, no call queue right now. Again, our call number's right here. You can call in and press *6. If not, we'll answer live stream questions. The info that you'll need is right on our application at tulsa-real-estate-fund.com. You can read through the application and you'll see exactly what we need you to submit. Simple as that. Anyone else on live stream or in the Q&A? We want to, again, offer this opportunity for you guys to talk to us and me.
Destiny on Facebook asked, any specific areas you're targeting, or can deals be all over?
We are doing deals nationally. There's no specific area. Absolutely no.
James Tomlinson on Facebook asked, would there be a list of properties/projects that have been approved so that investors know how the funds are being allocated?
If you go to our website, tulsa-real-estate-fund.com, you will see the first deals of our portfolio that are done. They're right on our homepage. And the deals that have been approved and clear to close. If you are an investment partner, those deals will be described in the video that I will be sending you all who are investment partners only. You will get that video, and then as those deals close, they will be disclosed for the general public.
Royalty Mason asked, would you invest in a nail lounge in South Florida?
I would invest in the asset of a nail lounge in South Florida, meaning the physical real estate asset. And if that business were a long-term anchor tenant that produced revenue, and the financials made sense, and the equity made sense, and the sponsor made sense, that would be an investable opportunity. It's all about deals making sense, SENSE and CENTS.
Eric Thomas on Facebook asked, how do I become a qualified investor?
Well, for our fund, again, after our qualification is renewed, we'll be taking on subscriptions and new investment partners. Please join our waiting list and our email list at tulsa-real-estate-fund.com. We accept non-accredited and accredited investors. You will self-qualify on our website. There's frequently asked questions on our website as well. And you can invest as little as $500. to receive an 8% preferred return and your prorated share of 50% of the profits of our opportunities.
Curry Stevens just said, we really don't realize what we have before us. Its potential is beyond comparison to anything today for the people.
Kurt, I appreciate you, King, for saying those comments. It's my job and our job to make us more aware of what the opportunity is. Those in the real estate world know this is genius. And I'm not tooting my own horn, but this is brilliant. I mean, I've been in the industry really since I was 22 years old, my first mortgage job. At 22, I'm 38. And I've done mortgage financing. I've been a branch manager. I've been a celebrity realtor. I've worked at Sotheby's, Coldwell Banker, Keller Williams, Century 21. I've managed millions in real estate, owned millions in real estate. I've done things in the industry at the highest level. And to do this, it's this as a product, you all will see. I'll just show and prove. And not just this, but the proof of concept of what we've put together from a regulatory, administrative, compliant, from a treasury, from a development, from a underwriting, from a technology, from a marketing, from a branding, from a human resource and operational perspective and conglomerate. All that goes into this. And to have done this as trailblazers and pioneers, the first Black-owned real estate crowd fund, when there were less than 100 real estate crowd funds in the country, less than 500 crowd funds in general in the reggae space in the country when we started, to do this as pioneers and for you all to be a part of it or supporting it or praying for it or whatever, and that is, I'm looking forward to what this model means to our future. It's for me, I know I have a responsibility to all of you right now. But to me, as a visionary, it's not about the right now. It's not about the instant gratification of now, but it's what this model means for the future. And I look forward to my investment partners pressing play and seeing and hearing what I have to say in this very special video. I'm going to be sending you all over the next 24 to 48 hours to your emails for whoever has invested to this date. I just look forward to sharing these thoughts and this reality with you. And for those who haven't invested yet, again, get on our investment waiting list, tulsa-real-estate-fund.com. Get on our email list for the future of what we are doing for and with the urban community.
At I am J-Mo on Instagram asks, is there a specific amount of experience required to take part in the 100% option of funding?
Great question. Is there a specific amount of experience to take place to receive this type of 100% funding? You must be able to prove some level of real estate sophistication, experience, or training, or have an experienced partner in a syndication in order to be able to take part in this. We're not going to 100% fund a newbie investor who's never been trained, who doesn't even understand the terminology, who doesn't even understand underwriting or evaluation. We were not going to be fools as, fiduciaries. So there's not per se a year limit, but there are some qualifications that we are, in level of sophistication, we are looking for to be able to do this at 100%. Now, if someone came with an opportunity, this is the brilliant part. Why I just don't have a clear no answer. If you are new, you've never invested in real estate in your life, but your grandparents, your aunt, or maybe you just bought years ago or whatever, or you've came across an opportunity that is a slam dunk opportunity, but you're just new, we will consider working out a capital partnership with you. Maybe you don't lead on a development and we lead on a development, or we bring a lead developer in. But we would not turn down a slam dunk opportunity simply because you're new. We just make it a fair win-win scenario. You have to understand as a newbie that you'd have to concede a little bit of the equity and the profits in order to be able to be part of the opportunity. That's good deals to me, right? And that's how we're looking at this. We're not looking at this as stringent black and white underwriters and what you've always gotten your whole life as you go to the banks. We're looking at this totally different, very unique. And I feel confident in doing so based on my experience in the industry and my team's experience.
Dwayne Montgomery on Facebook asked, what's the lowest value deal you're willing to close on?
The lowest value deal? Dwayne, if you brought us a $10,000 deal that we had to only invest $3,000 in to make $10,000 and $7,000 profit, or a 70% or more than that, that'll be 300% plus return, we consider it. It's not about the value per se, it is about the opportunity. All right, so we covered some live stream stuff. There were no callers in the queue. The recording still is, call still recorded. Yes, James?
Thomas asked, do you offer the training for those that are new?
Yes, for those who are new, who need the training or would like training, like you see there's opportunity for funding. You don't have that problem anymore as long as we continue to perform and exist. You can submit deals, not saying everyone will get funded because they won't, but you'll at least have the understanding on how to submit deals and have an opportunity for capital. We do, through our sister company, the Jay-Morrison Academy, offer training, one-on-one coaching, and we'll be soon offering a certification for you all to be able to be in better position for funding opportunities, whether it be within Tulsa or other firms or capital partnerships. And that's jay-morrison-academy.com, J-A-Y. Yes, sir.
Linda DeGue on Facebook asked, can a newbie who went through coaching get 100% funding?
Yes, a newbie that went through coaching would be in a much better position for 100% funding. And it's depending on the coaching program. It does not necessarily have to be our coaching program, but if it's a coaching program in which we verify, validate, and feel confident about, right? So it's not just about a Jay Morrison thing or Jay Morrison organization thing, but if it is a reputable firm and we feel that your astuteness and level of understanding is where it needs to be, we of course believe that our coaching program gets you there. And in our coaching program, we partner with our clients anyway. So there could be opportunities for us to guide you, if not through Tulsa, through other capital partnerships that we have as well. This is not the only capital partnership and funding source that we manage and have, but it's one that, again, is open to urban developers and those who are sophisticated, have the understanding or experience. And you guys can apply for our coaching at jay-morrison-academy.com/coaching. You must apply and be qualified, but we do offer different levels of one-on-one coaching at jay-morrison-academy.com/coaching. And there's also online trainings as well.
We have a caller in the queue.
One caller in the queue, go for it.
Hey, peace, King Jay.
Peace, peace.
Hey, this is Vince calling from Atlanta. What is the maximum amount that we would expend capital to for our deal?
Great question, Vince. He asked, what's the maximum amount we would expend towards a deal? That's going to fluctuate depending on how much liquid cash or capital that we have in the fund. Current date, that number is probably going to be around $2 plus million.
Okay.
That will change as capital gets deployed. And I'm saying that because we already have about $1.5 million allocated towards our next closings. But then when we go back through our qualification and are renewed for a subscription and raise, we'll be raising more capital, and then that again will get deployed back into the market as well.
Got it. Okay, appreciate it.
Yep, and the max for the whole fund is $50 million. So right now we have about $7.4 million raised, a little over that. There were $12 million of capital commitments, as you guys know, but about 7.4 of actual realized capital. And so once our qualification is renewed, we will then be going out for the next tranche of the 40 plus million, going for the full $50 million cap of this Reg A fund for sure. All right, family. We're gonna wrap up. We said a lot tonight. I think this is a great episode. Hope you guys got a lot of value and understanding. Again, we're here to fund the opportunities, fund the block, man. Everybody else can buy back the block. I don't want to buy back the block. That's cool. Buy it up, please. But when you can and when you need to, come to us for funding. Let's create win-wins. That's where we all do what we do best and leverage our expertise, resources, and specialized knowledge for the greater good. Thank you all for joining me on this mission, this journey. Again, for all my investment partners, look for your emails the next 24, 48 hours.
Quick question.
Yes, sir.
Sedley Henry said, I went through the residential program and would like to be qualified for funding, but how can I get funding without going through the $2,000 easy funding program?
If you like funding, right, you went through the residential program, well, bring a deal or opportunity, submit it through Tulsa. If it's a good opportunity, we would consider you as a funding partner. That's one way. If you want to get $50,000+ on average on your first round of business funding, then you may want to invest into the $2,000 program to get you access to $57,000 of funding, or up to $250,000 your first year. And that is the cost of doing business, but I think that is a great return on investment for that access to capital in that particular program. Not to mention, we teach other private capital partnership opportunities, whether it be through Tulsa or those in your network, etc. But those are just two direct opportunities. A small investment into easy funding, use easyfunding.com, where you can get unsecured, uncollateralized business funding, or take your expertise you've learned from the Jay-Morrison Academy residential course, and when you contract your opportunity or have a deal or a prospective opportunity, submit it to our website, tulsa-real-estate-fund.com. Boom. Good stuff. Again, guys, I'll be back likely next week. Look for your emails. We're just working. That's it. We're working. Hope you all understand a little more about the business model. And I look forward to these being posted everywhere. Please share. Can you guys do that on Facebook, live stream, etc.? Can you guys share this info? Put it in your networks. Email it out to friends and colleagues. We still need you all to keep the momentum up. This is a unique opportunity for us to continue to do great good and just to make impact and be legendary together. Like, this is the work. Like, everybody wants the results, but very few want to do the work. I said it last night on my Instagram. We all want that no risk, easy, light work, but we want legendary status. We want historical status. We want great things. But when it comes down to actually putting your money where your mouth is, your energy where your mouth is, your risk where your mouth is, many of us back away and shy from these opportunities. There's so many people I talk to with way more money than I, with way more influence than I, who have offered to partner in our fund or help them create their own fund. They're like, man, I don't want to deal with all them people. I don't want to deal with them folks. Like, many people do not want to take on the opportunity of offering opportunities to a crowd and crowd partners. They just don't want the headache, they call it. They don't want the scrutiny. They don't want the reputational risk. And we have proudly and gladly taken on those risks and really taken on this opportunity, I look at it as. Not a risk, but an opportunity.
Risa says, can't wait for July's corner class in Philly.
Yes, that's what I was going to say. Thank you, Queen Risa. So, corner class, guys, we're back on tour May 3rd at the Legacy Center. Will be the start of a 10-city corner class tour, free financial, family wealth, and real estate game education on the corner starting May 3rd, 6 to 8 p.m. Go to cornerclasstour.com. Cornerclasstour.com to get free game on how to get funded, on family wealth, on how to acquire real estate, how to buy back the block right in your neighborhood. We're going to 10 cities starting here in the Atlanta area, East Point, Georgia, at our Legacy Center asset. This is your chance to visit Legacy Center campus, to build with Ernestine Morrison and I and the rest of the team. Come on out May 3rd, 6 to 8 p.m. More details at cornerclasstour.com. We're going to Dallas, Houston, Los Angeles, Philly, New Orleans, Detroit, St. Louis, LA, and Bronx, New York. Hope I didn't forget anybody, but we're going to 10 cities. Cornerclasstour.com. See you guys there May 3rd, 6 to 8 p.m. Show up at East Point. Show up to the Legacy Center. Show us some love. Let's launch this Corner Class Tour together and be on our way to do continuous great things, doing the work that we're supposed to do to get the results that we want to have. All right, guys, I'm out. Peace.